cycle doesn't seem to have played out. We're behind schedule. We should have had a bull run already.
Our institutional client base is certainly positioned for a year-end rally.
Hi, Brad Mills. I've been waiting a little bit to send you this video. Actually, it's not been that long. It's been less than 3 months.
Hey everyone, Crypto Insight UK here, and I've got to share something that's been on my mind. And I have a feeling you're all thinking the exact same thing. The vibe in the XRP community right now, it's giving me serious deja vu from last year. Remember how we were all feeling right before the elections hit? That same energy is back. And here we are, November 2nd, 2025, and it's like we're reliving that whole emotional roller coaster all over again.
And, when we take a look at where we were at right around here, check that out.
And guess what happened next? This is the crazy part. We were sitting right at the edge of a massive XRP explosion. Picture this. XRP was just chilling at around 50 cents, and then bam! Over the next month, we watched it absolutely rocket all the way up to nearly $3, $2.91 to be exact. Of course, it eventually pulled back down, but what a ride that was.
This only took roughly 30 days. Okay, so here's the thing to keep in mind. When everything feels doom and gloom, that's usually when the magic happens. Euphoria might be just around the corner. I'll never forget this moment last year. I was literally gaming with CryptoMan1, playing the Call of Duty beta, and we're both talking about how absolutely terrible the sentiment was. You know how it gets in the community, right? Look, I've learned to just stay out of those negative comment wars. It's honestly a waste of energy. Sure, sometimes I'll jump in for a quick response, but then I catch myself thinking, why am I even doing this? And just hit that block button instead. But here's what I'm really excited about. November was absolutely incredible last year, and I'm really hoping we're about to see that same energy again. We do see something similar for this November. Guys, we're starting to slowly grind to the upside.
The structure on the chart is intact.
So let's talk numbers for a second. The sentiment? Yeah, it's pretty much stuck in the same spot. We're sitting at 35 on the Fear and Greed Index, which means we're still deep in fear territory. And when we look at the overall market cap, it's barely budging. We're at $3.72 trillion. But here's the thing, that's only up by less than 0.5%, basically nothing. The whole market is just, well, it's sitting there doing absolutely nothing. Super flat, super quiet. And you can see exactly what I'm talking about when you look at the charts. Crypto prices have been completely sideways for the past 24 hours, just totally dead in the water.
But here's the real tell. It's not just about the prices being flat. The volume is practically non-existent right now. We're just not seeing any serious money flowing into the market at all.
Let me pull up the total market cap chart for you guys real quick. Now here's something interesting. While volume has definitely been climbing over the past couple of years, it's funny because we aren't seeing those big price fluctuations. Again, this is the total market cap on the daily. But here's where things get really interesting, guys.
Right now, the crypto community is completely split into two camps, and I want to break this down for you. Camp number 1, the bears. These folks are convinced we're looking at a 2021-style distribution pattern. They're absolutely certain that we've already hit the top, and it's all downhill from here. Camp number 2, the bulls. Now these guys have a totally different take. They're expecting us to dip lower, just like we saw back in March. But here's the kicker. They don't think we'll actually break below our current range. And that second scenario, that's where things get spicy. If we can't break below that range, it means there's some serious buying pressure absorbing all the selling. And you know what that usually leads to? Bitcoin prices shooting way, way higher.
And here's where his analysis gets really interesting. He points out that the EMA 50 hasn't even been tested yet, while everyone's already freaking out and panicking. But let's step back and look at this objectively. What he's basically saying is this. Historically, we usually see a dip down toward that EMA 50 level before the real rocket ship takes off. And guess what? That hasn't even happened this time around. So here's the timeline we might be looking at. We could still have another couple of weeks, maybe even 2 to 3 weeks before we see that explosive move to the upside. The market might just be setting us up for one final shakeout before the real fireworks begin. So that's one theory to keep in mind.
But wait, there's more. Samson Mow has thrown another interesting idea into the mix. He's suggesting that this entire Bitcoin cycle has actually been delayed. Check this out.
Cycle doesn't seem to have played out. We're behind schedule. We should have had a bull run already, like a massive run up. And, we're down actually at the time of this recording. So I think this cycle, if you want to call it a cycle, is delayed. It might push into next year for whatever various reasons there are. But I think the nation state adoption is coming. We're pushing on a lot of fronts. Other companies and people are pushing too. There are concrete examples of what Bitcoin can do to benefit a country out there right now. The moves in the US, I think, have yet to propagate throughout the world. So Trump did create the SBR, but they haven't started buying yet. And we are talking with other countries to do the same. There are a few that have said they will create it. And I think it's all coming. It's really that these things happen very quickly. It's like literally gradually and then suddenly. And I think we're on the tail end of gradually and we're at the beginning phases of suddenly. And if you look at just the US alone, they're pushing forward on a lot of their budget neutral Bitcoin acquisition and the Bitcoin Act too. So I believe it's simply a matter of time before we see a massive run up and we see a massive nation state FOMO, panic.
We could be on the tail end of gradually, and hopefully we do in fact move up suddenly. All right, let me pull up the Bitcoin chart so you can see exactly what I'm talking about. Right now, we're sitting around $103,000. And here's what's been happening since the beginning of July. We've just been chopping back and forth in this range. Bitcoin's been flip-flopping like a fish out of water. Now, technically, yes, we have been hitting new all-time highs. But here's the catch. They're barely new highs at all. Let me show you what I mean. I'm going to draw a line across all these so-called all-time highs and use the range tool to show you just how close together they really are. Check this out. From our most recent high to the one we hit back in August, we're talking only about 1.5% difference. And from August back to July, even tighter, just 1.1% apart. So while everyone's celebrating these new all-time highs, we're not seeing those explosive 15%, 20%, or 30% jumps above previous peaks that we're used to. It's like Bitcoin is tiptoeing to new highs instead of blasting through them. But here's where Samson Mow's theory gets really interesting. He's suggesting that all this sideways action could be setting us up for a massive, explosive move to the upside. And it could happen suddenly. So Ted jumps in with a really important point here. He's like, look, I get it. Tons of people are convinced we've already hit the cycle top, and I understand why they think that. They're basing it on what we've seen in the last 3 cycles. But here's where it gets interesting. Ted thinks this cycle might actually be playing by completely different rules. So Ted breaks down why this cycle is different, and honestly, his points are pretty compelling. First up, and this is huge, we hit new all-time highs before the halving even happened. Remember, the halving was back in April 2024, and Bitcoin had already smashed through its previous records by then. That's never happened before in crypto history. But wait, there's more! Ted points out that Bitcoin's uptrend has been completely different this time around. Instead of those crazy volatile spikes we're used to, we've seen this steady, gradual climb that's been going strong since early 2023. It's like Bitcoin decided to take the elevator instead of the rocket ship. And here's the kicker. Bitcoin has been hanging out above 100K for almost 6 months now. Ted makes a great point here. During a real blow-off top, you don't get this kind of sustained consolidation. You get a quick spike and then crash. Now, don't get me wrong, Ted's not ruling out a correction completely, but those massive 60 to 70% crashes that we've seen in previous cycles, he thinks that's pretty unlikely at this stage. So when you zoom out and look at the bigger picture, yeah, we've hit those new highs, but we're missing that explosive, unsustainable momentum that usually signals the end of a cycle. But hold up, there are actually tons of factors pointing to this not being the top. Shanika drops some serious knowledge here that's worth paying attention to. First, he makes this brilliant point. The top isn't just a number on a chart, it's a liquidity event. And here's why this cycle is completely different. The unprecedented setup. We got that new all-time high before the 2024 halving, something that's literally never happened before in Bitcoin's history. Then, instead of crashing, Bitcoin spent 6 months building a rock-solid base above 100K. And here's the thing, real blow-off tops don't stick around to build floors like that. The supply crunch is real. Bitcoin supply is absolutely starving right now. We're only getting about 450 new Bitcoin per day after the halving. That's roughly 164,000 per year. Get this, one strong week of ETF buying can literally eat up months worth of new Bitcoin supply. The game has changed.
But here's the biggest shift. The type of buyers has completely transformed. We're talking ETFs, corporations, and government treasuries now. These guys aren't day traders. They buy Bitcoin and lock it away in cold storage. Those coins aren't coming back to exchanges to chase quick profits. Why a 60 to 70% crash seems unlikely. Shanika breaks down why those massive crashes probably won't happen this time. Big crashes need two things: credit getting squeezed and people being forced to sell. But right now, most of the buying is straight up spot purchases, and the people selling are mainly just miners with their daily flow. Sure, we see leverage spikes sometimes, but spot buying keeps dominating. Without leverage running the show, those scary liquidation cascades fizzle out quickly. The macro picture. And here's the kicker. The whole financial system is under stress. Quantitative tightening is hitting its limits while countries are desperately trying to keep their reserves up. When stress hits, balance sheets have to grow again.
But hold up, there are actually tons of factors pointing to this not being the top. Shanika drops some serious knowledge here that's worth paying attention to. First, he makes this brilliant point. The top isn't just a number on a chart, it's a liquidity event. And here's why this cycle is completely different. The unprecedented setup. We got that new all-time high before the 2024 halving, something that's literally never happened before in Bitcoin's history. Then, instead of crashing, Bitcoin spent 6 months building a rock-solid base above $100K. And here's the thing, real blow-off tops don't stick around to build floors like that. The supply crunch is real. Bitcoin supply is absolutely starving right now. We're only getting about 450 new Bitcoin per day after the halving. That's roughly 164,000 per year. Get this, one strong week of ETF buying can literally eat up months' worth of new Bitcoin supply. The game has changed, but here's the biggest shift. The type of buyers has completely transformed. We're talking ETFs, corporations, and government treasuries now. These guys aren't day traders. They buy Bitcoin and lock it away in cold storage. Those coins aren't coming back to exchanges to chase quick profits. Why a 60 to 70% crash seems unlikely. Shanika breaks down why those massive crashes probably won't happen this time. Big crashes need two things: credit getting squeezed and people being forced to sell. But right now, most of the buying is straight up spot purchases, and the people selling are mainly just miners with their daily flow. Sure, we see leverage spikes sometimes, but spot buying keeps dominating. Without leverage running the show, those scary liquidation cascades fizzle out quickly. The macro picture. And here's the kicker. The whole financial system is under stress. Quantitative tightening is hitting its limits while countries are desperately trying to keep their reserves up. When stress hits, balance sheets have to grow again. So we're literally witnessing a brand new era for crypto unfold right before our eyes. And get this, Goldman Sachs executives just dropped some insider intel that's pretty wild. They're saying their big money clients are actually planning to cash out during what they're calling the Santa Rally. We're talking about a potential surge that could run all the way through November and straight into December. Shout out to Mr. Man for bringing this to our attention. The timing here is absolutely incredible. So here's the million-dollar question. The Santa Claus rally is coming. Are you guys ready for it? Alternative version, more dramatic. Welcome to the new era of cryptocurrency, everyone. But wait. There's some juicy insider information we need to talk about. Goldman Sachs executives are literally telling their wealthy clients to prepare for profit-taking during the upcoming Santa Rally. This thing is expected to blast off through November and keep the party going all the way into December. Big thanks to Mr. Man for sharing this bombshell with us. The Santa Claus rally is about to hit. The real question is, are you positioned and ready to ride this wave?
No. Our institutional client base is certainly positioned for a year-end rally, or in trading speak, a blow-off top, which effectively means that a lot of people are warming up to the idea that we might have this parabolic move higher over the next couple of months. The one thing that I would note about year-end positioning is that our institutional clients are very, very grossed up in terms of risk. And so effectively what that means is if you take the absolute value of clients' longs positions, plus the absolute value of their short position, that number is at a 5-year high. Our clients love AI and they love derivatives of AI. So think semiconductors, think AI power companies. But as they continue to buy these companies, as they break out to all-time highs, they're selling other sectors against it. That's why the net positioning is only maybe a 7 out of 10. The sectors they're selling a lot are energy, healthcare, and anything related to the consumer or the economy. Think retailers, think restaurants. And so effectively you have this setup where everyone thinks the market's going to go higher, but I think the real pain trade for a lot of our clients is that if the market goes higher, but it's not led by AI and the AI complex, rather if it's led by other sectors of the market.
Now he dives into way more detail about exactly what they're planning to sell. But let me zoom out and give you the big picture here. This whole selling into November and December strategy, it's not just smart for Goldman Sachs' ultra-wealthy clients. This could be the golden opportunity we've all been waiting for, too. All right, guys, Jack the Ripper just posted something that's absolutely hilarious. I don't know if you've been keeping up with Keem lately, and since it's Sunday, I figured we'd keep things a little lighter today. So apparently, someone had the audacity to tell Keem that his $1 million XRP purchase was a terrible call. Well, Keem decided to clap back in the most epic way possible. You've got to hear this response.
Hi, Brad Mills. I've been waiting a little bit to send you this video. Actually, it's not been that long. It's been less than 3 months. On January 17th, I bought 1 million XRP for $276,000. And you responded by saying, "Wow, you're such a scrub, a reprehensible influencer. You're going to directly cause some of your followers to have significant financial losses. I hope nobody commits suicide when XRP goes to 1 penny and they bought in when they saw how much you put in." Now listen, Brad, I'm just an influencer. I'm just a YouTuber. But you, sir, seem to be a very credible investor. I mean, look at this. You're even followed by him? Wow, you have credibility. Brad, the 1 million XRP that I bought for $276,000 is now worth $2 million in under 3 months.
And that's the perfect example of how a little patience and perseverance can absolutely pay off in this space. Now, obviously, and I'm sure Keem would agree, this isn't financial advice at all. He's definitely not telling anyone to go drop $1 million on XRP at today's prices. We're just celebrating a win here. But speaking of XRP, let's actually pull up the chart and see what's happening with it right now. So XRP is sitting at around $2.52 right now. And you know what? We're actually slowly but surely grinding our way up. Now, we're still sitting about 31% below the all-time high, which puts things in perspective. But here's what everyone's really wondering. Are we going to blast through those previous highs? And more importantly, when is it going to happen? Here's what's really interesting, though. Regardless of what all the analysts and experts are predicting, the bulls are absolutely loading up right now. They're treating every dip as a buying opportunity because they're convinced we're about to see a massive bull run kick off in November. So this might be the smoking gun that shows us exactly where smart investors think XRP is headed in November. Check this out. The amount of XRP sitting on exchanges has been dropping pretty significantly over the last 24 hours. And this data is coming straight from CryptoQuant, so it's legit. We're talking about a 0.21% decline in XRP exchange reserves in just 1 day. Now that might not sound like much, but here's why it's actually huge. When coins leave exchanges, it usually means people are buying them up and moving them to cold storage for the long haul. This whole move seems to be driven by anticipation for that November rally we keep hearing about. But here's the really interesting part. A lot of this bullish energy is being supercharged by expectations around the XRP ETF launch. So basically, people aren't just buying XRP and holding it on exchanges where they might be tempted to sell. They're pulling it off exchanges completely, which tells us they're planning to hold for something big. Actually, I just covered this whole XRP ETF situation in detail a couple days ago. I'll throw that link up in the top right corner for you guys. Definitely worth checking out. But here's the timeline we're all watching. We're looking at a potential launch date around mid-November. That's what everyone's aiming for right now. Now, here's something really important to keep in mind. When we see tokens flooding onto exchanges in big numbers, that's usually a red flag for incoming volatility. But in this case, we're seeing the exact opposite. And honestly, I'm hoping that volatility shows up sooner rather than later, because it could mean big moves are coming. What we're actually seeing is shrinking exchange reserves, which tells a completely different story. Investors are pulling their XRP off exchanges, and that's typically a sign of two things. Either they're gearing up for serious long-term accumulation, or we're seeing institutional players positioning themselves ahead of that first-ever spot XRP ETF launch. And get this whole analysis actually references a tweet from Eric Balchunas, who's basically the ETF guru everyone listens to. Pretty interesting stuff.
So Eric points out that XRP didn't go through the same back and forth drama with the SEC that Solana had to deal with. That's actually one of the main reasons why issuers feel like they're ready to move forward with an XRP ETF. And then Eric throws in this classic line. He can't stand when people can't write properly. But hey, he says it's still worth a shot anyway.
All right, I think you guys are getting the full picture here. I want to give a huge shout out to all the amazing analysts and content creators who made today's video possible. XRP Crypto Wolf, Jack the Rippler, Mr. Man, Shanaka, Ted Pillows, Trending Bitcoin, and of course Crypto Insight UK. These guys are absolutely crushing it with their research and insights. Definitely worth following if you're not already. Michael Branch also posted this guys with regards to the rlUSD. And here's some more great news. rlUSD is now debuting on Bitpanda. This is huge for expanding Ripple's stablecoin reach across the market. It's really exciting to see rlUSD continuing to gain traction and momentum. Now with Bitpanda on board, they're adding another major platform to their growing list of partners. This is all about expanding that global footprint and really solidifying Ripple's position as the leader in cross-border payments. What makes this so powerful is Ripple's focus on transparency, regulatory compliance, and that rock-solid blockchain infrastructure that just works seamlessly across different platforms. So let's check out what Bitpanda actually announced. They just dropped this official statement. New on Bitpanda, Ripple's rlUSD. Here's what makes this stablecoin special. It's a US dollar-backed stablecoin that's backed one-to-one with monthly attestations to prove it. And here's the kicker. It's specifically built for cross-border payments and real-time settlement. What's really cool is that rlUSD is issued on both Ethereum and the XRP ledger, giving it maximum flexibility and reach across different blockchain ecosystems. So Bitpanda now officially has rlUSD live and ready to go. But here's what's really impressive. They're highlighting that rlUSD is already available across a massive network of global exchanges and payment providers. We're talking Alchemy Pay, Archax, B2C2, and honestly, the list just goes on and on. Analysts are looking at this widespread distribution and seeing it as a major signal. There's clearly growing demand for fiat-backed digital assets across both centralized and decentralized platforms. The supporters of rlUSD are really excited because they believe this stablecoin, along with similar tokens, could be game changers. We're talking about stabilizing crypto markets, revolutionizing payment systems, and boosting global liquidity in ways we haven't seen before. So all eyes are definitely on rlUSD right now. Personally, I'm really hoping we'll see some meaningful impact as we move into 2026. I've got this strong feeling that Ripple has some seriously interesting plans brewing for rlUSD that are going to completely surprise us next year. The pieces are definitely falling into place for something big. And speaking of big things happening, Ripple just dropped a reminder that's got me excited. Next week at SWELL 2025, we're going to see some seriously heavy hitters take the stage. We're talking leaders from top-tier banks and major asset managers, including Citi, Fidelity, and Franklin Templeton, all coming together to discuss what's ahead for the industry. This is huge. When you get names like these in one room talking about the future, you know something big is brewing. This whole event is being hosted by Merrick, and I've actually got the full agenda pulled up here for you guys to see. And here's the timing. If you're watching this video on the day I'm dropping it, SWELL 2025 starts tomorrow. Perfect timing, right? But Monday, tomorrow, it's just the welcoming reception. The big stuff is happening on Tuesday, November the 4th. You can see the full breakdown right here on screen. It's all happening on Wednesday, November 5th. I'll drop the link to this agenda in the description below so you can check out all the details for yourself. I won't go through every single detail right now, but I have a feeling we're going to hear some pretty major announcements coming out of SWELL 2025. We could even hear, I'm hoping we hear some more news about the XRP ETFs. So this was just discovered. I first spotted this insight from Professor Ripple Effect, and then saw Lord V XRP sharing it too. Here's the key point that caught everyone's attention. The geographically diverse and continuous nature of XRP trading makes any attempt to manipulate its price incredibly difficult and way too expensive. So what does this actually mean for us? Let me break down Professor Ripple Effect's analysis here. This is all about why XRP won't be as volatile as people think, and it's based on some fascinating details from the CBOE BZX exchange filing for the Canary Capital XRP ETF. Here's the brilliant part. It's not about the market being completely still or frozen. XRP's stability comes from something much deeper. Its structural integrity.
not just the absence of price movement. Basically, XRP's global trading network is so well distributed and operates so continuously around the world that it becomes almost impossible for anyone to artificially pump or dump the price without spending an absolutely massive amount of money.
Let me show you exactly what the filing says because this is absolutely crucial. Quote, "The geographically diverse and continuous nature of XRP trading render it difficult and prohibitively costly to manipulate the price of XRP." Now here's how I'm interpreting this bombshell. Yes, the price is going to be stable, but it's also going to be high, and once it gets there, it's going to be virtually impossible for anyone to mess with it. Why? 3 key reasons. First, global liquidity. XRP is traded on a massive number of exchanges worldwide, which means deep, continuous liquidity around the clock. There's always someone buying and selling somewhere. Second, 24/7 continuous trading. Because markets never sleep, there's no opportunity for artificial price gaps to form. Isolated events can't create those dramatic swings we see with other assets. Third, geographic diversity. Trading happens across multiple jurisdictions and time zones simultaneously. Try coordinating a manipulation scheme across that many regions. It's basically impossible. Here's the big picture. When you have a truly global asset being traded this widely and continuously, price manipulation becomes a nightmare scenario for bad actors. And this ties perfectly into the theory that XRP's price has to be steady, stable, and high for it to function as that bridge currency, conducting trillions of dollars in transactions globally. Think about it. If XRP is going to be the backbone for massive international transfers, you need a price that's stable enough for institutions to trust, but high enough to handle the volume. And here's what's really exciting. Canary Capital gets it. They're acknowledging that XRP's price has to be high for this whole system to work. This isn't some random speculation either. We've heard David Schwartz himself say this exact same thing in the past. And now we're seeing it confirmed in official ETF filings. With all these protective factors in place, the global trading, the 24/7 liquidity, the geographic diversity, manipulation becomes virtually impossible. Canary Capital is basically saying, yeah, this thing is built to be stable at high prices, and good luck to anyone trying to mess with it. So wanted to thank Professor Ripple Effect here and Lord VXRP just for posting that. We are getting closer to meaningful price discovery, guys. I'm genuinely excited to see what this next leg up is going to bring us. But hey, that's just my take on things. If you want to dive deeper into my market analysis and get more detailed insights on where I think we're headed next, you can check me out over at patreon.com/workmoneychannel.